What's going on YouTube? On this video I talk about an L. L for a lesson or L for a loss. I would call this a couple of lessons for in my career, in my pursuit to be wealthy, financially at least. And I want to talk to you about how I lost 75 to $78,000 in less than 4 days. It was a bit of a roller coaster ride, and the cost of this was just not financial. So stay tuned. Let's get this rolling. All right, so to give you some background information on what was going on, late 2019. So in April of 2019, I started my coffee trailer while I was doing some of my other business as a consultant for a freight forwarding company. I was mainly focusing on consulting on the operation side of things, how to streamline processes, coming from my operations background and how I streamline processes at my previous two jobs. I decided to approach freight forwarders and importers and exporters and see how I could streamline their services and streamline their internal operation in the offices. It was a multi aspect role, and the good thing was that I did it and I only got paid if there was a performance involved in those actual operations. I set up different targets and key performance indicators or KPIs, and based on those, I would get paid a certain amount of fee if those actual KPIs were met. That was early 2019, and April, May of 2019, I worked out that I had a bit of time left, and one of my previous projects, which I started with my ex-partner, decided to actually make it more fruitful. So I purchased the coffee trailer when I was in Wentworth Point, which is closer to Sydney Olympic Park in Sydney, New South Wales. I decided to do something on my weekends because all I realized that when I was there, I realized that I was spending a lot of time on the weekends just at home, mainly on Netflix or mainly just, doing not so productive stuff. So I thought, you know what, as a side hustle, I would approach this, which was part of my thought process when I was a national operations manager, which I talk about in one of the videos, which is 3 tips on making a six-figure business. You can have a look there. I'll put the link up somewhere here. And after that, it kind of the idea didn't really fizzle out, but because I purchased this property with my ex-partner and decided to move here, the whole coffee trailer project kind of got shelved because the idea and the location was in Sydney, in Wentworth Point or Sydney Olympic Park, but when I moved here it was a completely different place. Anyway, fast forward to April, May of 2019, I started the coffee trailer. I found a location, and then at the time, with the support of my ex-partner, we opened the coffee trailer, and the operation was running. Now, late 2019 was a bit of a roller coaster ride because there was bushfires, and it was the first year we were here, and the bushfires came all the way up to the fence of our property, or now which is my property, and that caused a lot of problems. The coffee trailer had a few damages. The generator had an issue. Not only that, a lot of the work around the area that the customers that were actually purchasing coffee from us were doing actually died down with the drought and with the the issues that was happening with the fires. There was a lot of the um, I would say the work died down, and in turn, people who were going to work was reduced, and in turn, our sales dropped down a little bit. So I was not panicking, but somewhat concerned that the coffee trailer was not sustainable. So this is now coming up to late 2019, early 2020. So January of 2020. Not only that, in December of 2019, we were approached by one of the owners of the local pizzeria and asked whether we wanted to start the pizzeria. So from the coffee trailer, my ex-partner decided that she was going to run the operation for the coffee trailer. And because of that, um, we decided that I was going to run the coffee trailer and the pizzeria was going to be run by my ex-partner. While I was doing that, what happened was my ex-partner started the operation and I had to kind of support her with the pizzeria because I had a bit of knowledge from working in a pizzeria back in the day. So I kind of took over the operations of that as well. However, because of the costs involved and things like that, I wanted to come up with, I guess, an extra side income. So yes, there was the coffee trailer. Yes, there was now the pizzeria, but I did believe that I needed some sufficient side income. That was my thought process, side income, and I decided that okay, what if I see whether I could come up with something that's somewhat automated. It's only a couple of hours a day, and it's a fairly easy thing to do. So based on that, what I picked was day trading. Yes, ladies and gentlemen, I took up day trading. I'm looking at it now. It was actually a great idea. I learned a lot of lessons, but it was very expensive. It was a very, very expensive few lessons. Not only that, there was other personal challenges that I faced due to what I did, which is what I'm going to get to next. So, come late January of 2020, the ASX 200 was actually having a really good run. Looking at the charts, it was almost reaching an all-time high. I think just above 7,000. Because of that, the Australian dollar was doing fairly well. So I decided that I was going to trade the Australian dollar, USD, Japan currency, so forex trading as well, and the ASX 200 because there wasn't much volatility, but it was quite bullish. Because of that, I was like, you know what, I could trade this in short term and make a couple of $100 a day. I decided I'll get into that, so I put in $1,000. I started watching YouTube videos and learning how to trade, learning how to read charts, learning how to read candlestick patterns, coming up with a customized trading strategy that worked for me. Even though there's all these different trading strategies, I wanted to kind of take a little bit from everyone and make my own trading strategy. Based on that, I was looking at the charts. The ASX 200 was doing really well. I started trading and I was extremely good at it. When I say extremely good, I mean I made the $1,000. I doubled it, made it 2,000. Doubled it again, made it 4,000. Now, just something that Patrick David, I believe, Patrick Bet David, he's got his own podcast as well. He talks about something which is $1 million is 10 doubles. Let me get this right. So $1 million is 10 doubles from 1,000. That was my thought process. So if I double my money every week, I'll get to 10,000 or $20,000. That will be sufficient, because if you guys watch my video of how I got my coffee trailer, that was through a credit card. So I borrowed money through my credit card, so that needed to be paid off as well. I was like, you know what, if I can make this $20,000, I could pay off my credit card, and that would be perfect. And then we needed to pay off $60,000 for the equipment in the pizzeria. So that was another challenge. I in turn wanted to open a coffee bar, so I needed another 50,000 for that. So there was all these things that was running in my mind, and I'm like, you know what? Let's start this. And as Jim Rohn says, take action when the idea is hot and the emotions are strong. So I did that. I was like, you know what? Let's get into this. What's the worst that could happen? I can lose $1,000. That's the worst that could happen. Uh, the cons was I was going to lose $1,000. The pro was that I could potentially, bare minimum, pay off half my credit card. That's 10 grand. Or I could potentially get to maybe $50,000. That was my goal. So started trading. Mid February, my CFD account was at about 5.5 grand, and I was doing really well. Like, I was like, you know what, this is pretty good. There's this, I guess, theory behind trading. You don't trade all your capital in one trade. So roughly you do 5 or 10%. So 5 or 10% of $1,000, or 5 or 10% of $5,000 was minimal. It was only about $500, which was not enough. So what I did was went back to my credit card, borrowed another 30,000 out of that credit card, and chucked it into the CFD. Now I'm in $1,000 plus the 30 grand. Yes, I made about 4 grand from the CFD trading. Now what I did was I started leveraging even more. Now, while I was leveraging money, I decided that I should up my trade. So instead of 10% of capital per trade, I pushed it up to 25%. So I kept working on this, and come late February of 2020, COVID happened. And or the signs of COVID was happening, and the market was slowly changing, and I could see that my trades, if I was winning 5 out of 20, now I was going down to about 1 out of 20. So my trades were not doing that well, and eventually I came to a point where I was, so from the 35 grand, I was down to about 25. Now, this is where my first lesson was. My first lesson was that I was trying to recover my losses by trading even higher. So when I say trading even higher, I was sacrificing or investing more than now 25%. So I pushed it up to 30%. There was one trade I did at 50%. I won that trade. However, it was a very minimal win. Like, I put in, I think it was maybe 15,000, maybe 14,000 on that trade, and I got back maybe 18,000. So usually when you're trading, minimum should be 1 to 1. So the risk to reward ratio should be 1 to 1 is the bare minimum, and then like most really good traders would go for 3 to 1 or 2 to 1. So look, I was happy with $1,000 on any trade. I didn't think of the risk to reward ratio as much. I was thinking, all right, put in 14 grand, I get out 18 grand, great. But I didn't think about how the losses will impact me at the time. That was lesson 2. Lesson number 1, I was trading more capital than I should per trade. And lesson number 2 was that I was not looking at the risk to reward ratio that I got into each trade. Now, pushing back, come maybe mid March, yeah, mid March, my CFD account was down to about 20,000. So from 35, it was down to 20,000. So I decided that I needed to borrow a bit more money. I had another credit card. I know, looking back at this, the risk I took was just unbelievably irresponsible, and I know that. And this video is now getting published so that you don't make these mistakes. I don't know about you guys. I tend to on to the side of being risky as hell, rather than being more conservative. And that's me. That's always been me, and I will not change that. Now I do take calculated risks. I don't take irresponsible risks, but I still take risks. Without risks, there's no reward. That's what I believe in. However, this shouldn't have been the way I should have done it. Anyway, getting back to it, so I had another credit card. So I was at 35K. I pulled out, I think it was 40. I think it was more than that, but I'm gonna say it was $40,000. Actually, no, it was $30,000 because there was still another 20 grand left in that credit card. I can remember that. So it was $30,000. So now I've got 50 grand in my CFD, even though I've already lost 10 grand technically. Um, no, it was 15 grand. So I lost. There was only 20 left. Yeah, so it was only about, yeah, I lost 15 grand, so there's 20 plus put in another 30. So now we are at, what is it? 65, I think. Yeah, something like that. 65K, and I started trading again. Now I was being aggressive as hell. Um, and I was not reading the charts. I was jumping into trades that I shouldn't have done. That was the third thing. I didn't read the charts. Something now that's been tattooed in my brain when I start trading is trend is your friend. I did not read the chart. I didn't take a macro approach. I was trading on the 5 minute chart and the 15-minute chart. So I didn't look at the macro chart at all, the daily chart or the weekly chart to see what how the trend was moving. I kept going at it on the minute and the 5 minute chart, and that's when things got pear shaped. Came to a point where where I went down from the 50,000 to 30,000, and this is now it's like the gambler's fallacy, I think it's called, where you keep doubling thinking that you're gonna recover. That's what was happening to me, and what I did was I lost another 20 grand, and I put in a trade on the last 30 grand. That's right. I put in 100% of my capital trade on the ASX, to move up. Now, to give you a little bit of an idea, on I believe it was the 20th or the 23rd of, I would say the 20th of March, late February of 2020, the ASX hit an all-time high of 7,200. I think it was. It was the highest the ASX has ever been in its entire history, and I'm thinking, great, like it's gone up, fantastic. Once COVID hit, it started plummeting. That's where I got it wrong. I didn't realize how low it could go. There, there's a great video by Peter Lynch, YouTube, on YouTube, and he talks about how low can a stock go. Well, the answer is simple. People are like, oh, it can't go any lower. No, it can. It can go down to zero, and this was what happened to me. Yes, the ASX 200 didn't go to zero. However, I looked at the chart and I found there was support on the chart at about, I think it was 5,000, or maybe 5,200. I drew, like, I can still remember, I drew the support line and I'm like, okay, it's bounced back. There was a double bottom, and I'm like, now it's trending up. It's going to bounce back. That is fine. So that's when I went, okay, this is a sure shot. The RSI was perfect. So I ended up going, okay, I'm going to now get into a trade on an upward trend. So I, instead of shorting the ASX 200, I went on a long trade and put in the whole $30,000. It was probably around 11 a.m. when I got into the trade. Now, that's the time that I pack up the trailer and get out of there. And what happened was I had to go grab some stuff. I think we ran out of ham at the shop, maybe, or something like that, and I had to go um, to a shop which was a half an hour drive. So while driving, I had the chart up, and I'm like, okay, this is going all right. I saw the the candlesticks. I went on to the, I think it was the 30-minute or the 15-minute chart, and I saw there was a bearish candle touching 49.50, I think it was. The stop loss at, yeah, 48.50 or something like that. So the stop loss was there, and I think the balance would have been 3,000 from the 30,000 if the stop loss got activated. But I was like, at least I'll have 3,000. So had the stop loss at about 48.50 or something like that, or maybe 4900, and I saw this bearish candle touching 5,000 multiple times. I'm like, that's okay. So it's bouncing back off 5,000. This is great. This is going to be the support. And I walked in to the shops, and I wasn't monitoring it, and I didn't get out of the trade because now I was already in the red. So I had to wait for it to recover before I could get out of the trade. So because of that, I didn't get out of the trade. I waited for it, and I realized that it was coming up to a margin call where now the account was dropping down. So in terms of a margin call on a CFD, if there's not a sufficient amount of a balance in the account, what happens is the position gets automatically closed because you can't keep up with what the cost is. So what happened there was I ended up having to quickly transfer $10,000 from the coffee company, so Lara Coffee Co. Account to keep the margin call from being activated. And I walked into the shops, I bought what I had to buy, I walked out and looked at the chart. For a split second, the ASX dropped down to 46.50, and the wick was there, but the price had gone back up, but it just dropped down and went back up, and it was only on like for, I think it was not even activated. I couldn't see it on the 15-minute charts, which meant it was like a 5-minute thing. It just went and came back up. So what that did was, whatever happened, so below 4,900, because a lot of people would have had a stop loss at 4,900, because that 5,000 was the support line. And what happened was the sales kept coming on, the stop losses got activated, and it just went all the way down and back up, and $78,000 disappeared. And just like that, the all 78 grand or 75, I think, yeah, it was definitely $78,000, probably slightly more because I chopped and changed, and it was all gone just like that. So for anyone that's trying to do day trading, just be mindful. Do not try to recover your losses. Trade without emotion. Do not trade more than 10% of your capital, and worst of all, don't chase your losses. And at some point you need to cut your losses and move on. The cost of that was not just monetary. The move from $10,000 actually affected my relationship with my partner as well, because I didn't tell her about the $10,000 that I took from the company, because it was a rush thing that I did. I told her only at a later stage. She wasn't happy with that, and that caused some issues with my relationship as well. Therefore, um, be very mindful that you do not at any stage trade, like do risky trades. Like, you don't need to take that much of a risk. It was a crazy risk which I could have avoided. I was trying to chase the repayment of my one of my credit cards, ended up having double the money owing on one credit card, and further owing another 30,000 on a second credit card. It was a tough time, and it was a bit of a struggle. Got through it, and on one of the videos later on, I will tell you. So what I suggest is subscribe to this video, to this channel, because you would want to hear about how I recovered and what I did and whether I traded ever again. Hopefully this was entertaining, and you learned some lessons and what not to do in trading and in pursuing the chase of money. Uh, I hope you guys can take the good out of it and learn something from it. That's my intention. I will catch you on the next one. Take care.